how do you determine whether you have to pick a fight? Whether you have to oust a CEO, whether you have to replace board members, because you've done all of these things.
Yeah, look, Sarah, to be clear, we are prepared in every investment that we make to go all the way to the end, whatever that means. So you can't get stuck. One of the risks of being a value investor is getting stuck. Value traps are problematic. One of the things I love about being an activist is you have less risk of getting stuck because you can do something about it. We are our own catalyst. But we have to make sure that we don't get stuck also, which means for every situation in which we invest, we need to make sure we can go a step further. So that doesn't mean we start there. I mean, it's a lot easier to go and talk to management, talk to them about what changes should be made, and maybe they even have better ideas. It doesn't have to be what we want. Remember, our end goal is for the stock price to go higher and for the company to perform better. And we have ideas for how that can happen, but it doesn't have to be our ideas. And we will say that to the management team. We'll say, look, we have these ideas. If you have better ones, go do it. But up until now, you're not actually doing that. So we'll go and we'll have those conversations. And if we believe that they're going to take those actions and they start to take those actions and we start to see results, that would be great. That's easier. That's wonderful. That's fantastic. Unfortunately, in some situations, managements and boards put their walls up. They're a little more insecure and they aren't willing to take that advice for whatever reason. And if we believe that they're on one side and unwilling to listen and the shareholder base is on a different side and they want change to happen, then the opportunity is for us to step into that vacuum between what management and the board are doing and what shareholders want. And if a majority of the shareholders want change, then we have the power to be able to catalyze that change by going further, which might mean saying things publicly. It might mean writing a letter. It might mean nominating directors. It might mean changing board members, and it might mean, changing out, a CEO. And you're right, Sarah. We've done all of those things. You have to have the power to be able to do all of those things to hopefully not have to use it all the time. It's only a very small percentage of the time that we have to run a proxy contest. The overwhelming majority of the time, we're able to work with companies well before that.
Well, yeah, Darden was sort of legendary on that front because you changed everything from the pasta recipe to the entire board of directors. You have developed, Jeff, some industry-specific expertise. Restaurants, we've talked a lot about. I think you have a thing for like website management companies, Cars.com, GoDaddy, Wix, and I'm curious how that plays into the strategy and particularly the operational expertise. I would think it would help after these years of focusing on companies that are in similar industries.
Yeah, Sarah, I mean, you've mentioned a few. Semiconductors we're pretty well known for as well. I mean, there's actually quite a lot. I mean, again, we've been doing this for a long time. It's been 20 years in a lot of different industries. And as you invest in an industry, you build up your knowledge base, not only of the industry, but also of the people. Our business, every business, is about people. Companies don't run themselves. They're run by people. And if you have high quality talent in the organization that knows how to win, that knows how to succeed, they can usually do it again. So as you build up your network overall, and as you build up your network in each industry, you can gain knowledge pretty fast as to what can be accomplished inside those companies. And like I said before, it doesn't mean it has to be our answer. So oftentimes we'll get involved in a company and we will provide them with a hypothesis, but then challenge them to see if they can do better. It doesn't need to be our ideas, but when we have expertise and when we know experts in the industry and they can give us conviction that a company can be run better, it allows us to take a large stake and allows us to go talk to the company and to challenge those companies to perform better either our way or a different way. So when we're looking for companies, I mean, the best way to think about it is we're looking for companies that are undervalued and where there's something we can do about it. So is a company undervalued? Do we have an opportunity to make changes to those companies that will make a difference? And do we have a clear path to be able to influence those companies in the event that management, for some reason, isn't willing to listen to us in the first place? So it has to have all three of those elements. It has to be cheap, we have to have a plan, and we have to have a path, so an ability to influence the company. So that's what we're looking for in terms of process. But then in addition to process, we're also trying to identify companies that have operational improvement opportunities. So why are they cheap? How are they cheap? How do we find them? And there's a lot of different stories to talk about that, but the easiest way for me to describe that for, I guess, this audience, for financial advisors that are highly sophisticated, is all of us as financial analysts have grown up analyzing companies. And one of the key things, one of the most important things we do as analysts is we compare companies to other companies in their industry. So you'll perform a comparable company analysis. We will. We've all learned how to do that from our early stages of being investment analysts. And anytime you look at a set of peers in an industry, you're going to find some of those companies that are outperforming and some of those companies that are underperforming. It's always true. It doesn't matter the market environment. There's always going to be companies that are overperforming. There's always going to be companies that are underperforming. So our job is to look at those companies in every industry that are underperforming and try and figure out, should they be underperforming? I mean, that's the simplest way to think about it. If we can find companies that are underperforming, so they have lower margins, lower growth rate, and ideally also a lower multiple, but we think their assets are really good. We think they should be well positioned. There's no structural reason why they should be underperforming, then that's a great opportunity for us to get involved.
And then what? What do you do next once you start buying shares?
Yeah, Sarah, it depends on the situation, but one of the reasons, I mean, you asked about our hit rate. One of the reasons why this strategy works so well is because at the end of the day, everybody actually is really aligned. We all want the same thing. We as investors and companies all want the same thing. We all want the stock price to go up. We all want shareholders to have higher values in their portfolio. So what's really interesting, Sarah, is anytime we get involved in a company, we actually end up with a benefit. By definition, these are companies that are underperforming. The management teams, the boards all know that they're not performing as well as they should be. They all know they're missing their budgets. They know their bonuses are below their targets. So there's already frustration in the boardroom and in management, but because of human nature, they may not be making the hard decisions that they know they need to make. That's the key to our strategy is it's all rooted in human nature, and you probably have people inside the boardrooms, inside management, that are just not making the hard decisions that they know they need to make. To be clear, these are good companies. We invest in good companies, usually with good cash flow. They're not distressed companies, so they can be complacent. So what's the first thing that happens? I mean, what I say to a lot of people is imagine you, and let's take everybody that's watching right now. Imagine you're in the boardroom. Imagine you're in the management team. And Starboard, or another activist, but let's say Starboard comes and we announce that we have a 7% position in your company. And you're on the management team. So what do you do first? Well, your first reaction is you probably say, oh, crap, or some other expletive.
Hire a crisis communications company.
No. That's the second thing. You're right, Sarah.
Okay.
They will do that. But the first thing they're going to do is they're going to have a meeting. They're going to have a meeting. The first thing you're going to do is you're going to have a meeting. You're going to say, oh, crap, and then you're going to have a meeting. And when they sit down in that meeting, they're then going to say, what do we need to do? What do we need to do? Starboard's here. What do we need to do? Oh, well, they and the other shareholders are going to want the stock price to go up. And everybody that's in that room that's been a little reluctant to say all the things that they want to say, all the things that they're concerned about, and you guys know this as financial advisors in your organizations, in your companies, wherever you are, everybody's got these ideas of things that you all whisper and talk to each other about and say, man, I can't believe we're not doing this. This is so obvious. We should make these changes. Why aren't they doing this? All of those things that they're talking about but they're not doing are now going to be put on the table. And they're going to say, well, we better talk about these things that we haven't been talking about. We might need to shut down that money-losing initiative. We might need to, reduce spending in this R&D project that's not working that we haven't wanted to reduce. We might need to lay off some people. We might need to grow in a different area. There's things that they need to do, but they're not talking about it because they didn't have to talk about it because it might be hard. Now they're going to talk about it, and the board is going. Yeah, and the board's going to do the same thing. So before we do anything, the wind actually ends up at our back because, again, we're investing in a company, if we've done our research right, that's undervalued, it's underperforming, it's a good structural business, so it shouldn't have those issues. And then you get involved, and that management team's going to get together, and they're going to talk about how they can improve the business. Then they'll hire their crisis consultants and everything else.